Hey everybody, what's up? It's Booksy. Today is Thursday, December 8th. This is going to be a update for AMC. It's been a while since I've done a shorter update, my shorter meaning usually like 30 minutes or so. I meant to post one early in the week and I didn't get around to it. Today is going to be a bit of everything. Um, I need to make sure that everybody's aware of what's going on going into Friday. And then from that point forward, I think you can make your own decision based on what happens Friday. And I'll try to do a part two recap for the week. I'm just going to jump right in and just talk about some of the most basic things here. So you'll notice my chart looks a little different if you haven't been following the streams. I pretty much stripped a lot of this stuff away just to focus on a few really key points, namely the comparison between here and March. And one of the things that I've been talking a lot about is something called the mother of all charts. And the mother of all charts is a chart that takes into consideration that you basically have a rising accumulation here back from January all the way up till February, and then it drops back down into March. And during this time period, this run up and then pull back, you have a really substantial run afterwards, which is ultimately like, you could say, oh, it's just a spring and it was falling, in this particular case, a shrinking of the fractal going down, and then there was this run up. This ends up being one of the most important regions, in my opinion, that you can study on AMC for that reason, because there's so much here. There's rising accumulations, there's shrinking iterations, there's rising iterations here. There's this particular bottom fractal, which appears quite often. There's a spring with follow through. There's what I call like slingshots in this area. All kinds of crazy stuff happens here. There's curves, there's S curves. It's really like one of the tightest little subsections of bottoming that you see on AMC, and it's a really informed area. That being said, there are other things that I have been doing. If you remember, I've done the iterations. I already did another chart based on that. That was the last major update video that I did. I had shown you all the iterations just to demonstrate, like, hey, this is the way I see it going. And there's been so many updates throughout the week on all of that stuff, like macro stuff, whatever. In large part, nothing's changed just yet about the macro. I believe that at least for now, up until today, right, we have stayed back above 597. If 597 is confirmed to be a floor, and I'll talk about that in a little bit, then there's no reason to think that mother of all charts or father of all charts or whatever, or the iteration model, that any of those things would fail. There's just way too much going on right now that suggests that you're going to enter into a pretty significant bull market very, very soon. And I think, a lot of people use different kinds of charts for different things, but I've not found anything. Like this was one we did today, really simple one, but this is one we did today, and it just kind of demonstrates what it is we're talking about here. There's an angle that you can derive, right? And if you copy that angle to the top here, you can see like, oh, there's a push out, and then it comes and rests, and then it breaks out in a rising accumulation to the upside, and then you get a push and then a run up, and then we're expecting a push and then a run up back to all-time highs. And all of this stuff, it's like anytime someone asks me to look at something, I always try to check it against my own work, and I just haven't found anything still that really negates all the other stuff that we've been looking at. So everything's still looking fairly good. All right. Now, in this new particular model, I'm not going to have time to explain it today. Basically, the most simple version of it is this. Something very similar happens in many time frames. All right. I'm going to go to logarithmic now. In many time frames where you get this bottoming, then you get an ascending accumulation. After the ascending accumulation finishes, which looks like a little volcano area, you have another cat ear section, right? There's an upthrust that goes beyond the top, and it goes beyond the top according to where the previous supply zone is, it goes beyond it, and then it forms a cat ear, right? And then it drops down and it goes for a low. Oftentimes what this looks like, not all the time, but oftentimes what this looks like is it looks like you're in a rising wedge and then it falls down. And when the rising wedge falls down, kind of forms out more of a channel, right? It's still a little narrow in this case, but it forms out more of a channel, and then you end up with a rebound, right? It comes back up. It actually, in this case, regains this trend and then pushes to the upside. All right. So the rising accumulation here is a volcano-looking top thing. It's got the dip in the middle. Pretty common. We see it a lot in AMC. And then on the final area, before it crosses the creek, so to speak, and this would be your major price resistance right here, it breaches local supply, runs up hard, then it actually forms a distribution and comes back down. And it LPSs. Okay, and that's really important. And it does so, again, in this particular case, it's not really the strongest trend, but it is a trend. All right, and it does hit that trend when it comes back down. It's a little bit weird, okay? There's something else that happens here when this pulls back. It's weird because there's no fibs or anything this is attached to. It's just, it looks like it's definitely going for a particular spot, and it hits it and then it leaves. And it doesn't seem to be something you would notice on a retrace normally. You'd already have to have this at play. And I don't know if many people would have had this line at play. Here's something else that's really important, and this is where we're gonna kind of land for now, is that this is a series of slingshots. And I've talked about this idea of pullbacks away from a curve. And last time I demonstrated it, I talk about it a lot on stream, but last time I demonstrated it on a video, I think it was probably in the mother of all charts, or it may have been in the iterations. But essentially what it is if you have drawn out the bull curve, that was part of this S curve. And I know I've done this in other videos. I'm going to do it as quickly as possible right now so that you can see me do it. If you happen to have the bull curve drawn correctly, okay, and it's not exactly the easiest thing to do, but if you happen to have it drawn correctly, you have something along these lines, okay, something along these lines, yeah, and something really interesting happens when this pulls away. Okay, and I think originally what I had done is I drew it like this or something. And I don't know how I came up with that, but way back when, if you go back to really old Booksy charts, you'll see that I had this curve here. And I later found out that what this kind of is it's basically like a bull curve of, hey, we want to take the stock this direction, you know. And the bulls wanted to kind of see it come back up. And that's normal. You can think about it as just normal price action discovery. And then the bears are like, no, and you drive it back down. And this forms your S curve. That's all the S curves always look the same. They always look the same. There's always a cat ear section in the middle. You can see them all over the place. It's a redistribution, you know, in some cases. And every now and then it's more of a bottom, right? Because you might have thought the same thing was happening here. And it is an S curve, but it's really tiny and it's really range bound, and it ultimately breaks to the upside. Well, there was a phenomenon that happened back then that I didn't have a strong explanation for at the time. I simply had a curve, and I don't exactly recall exactly where it is, but I remember thinking to myself that there was this possibility that it was going to follow, right, and continue up. And again, I had it drawn more like a banana or something weird. And when we lost the curve, I remember thinking that there's no way it's going to come back up and get back to the top. Like, I thought it was going to climb up, you know, in a really bullish manner and get back to the top of the curve. And I had other ones on the inner one. And I found out later that it actually whipped like 50-50 around the curve. It laid on top of it, and then it ran up another 50%. Well, I've been noticing that that's a common trend for AMC, like a really common trend. And it happened again over here when we ran up in this region. Now, I had a price target from a diamond bottom, and I'm not going to get into that, but that actually gave me like a really solid price target. But I also had, if you recall, a sine wave. And I believe the sine wave actually went pretty low here. It's like that. And then I also had a trajectory line, and the trajectory line was right here. And one of the principles that I was looking at is I was noticing that when the stock would whip around certain trajectory lines, it would often do like a 50-50. And so I noticed back here, there was a rotational symmetry that had occurred to the upside and then the downside. And that was something I was measuring out in this region. Long story short, I was like looking at this, and even though this at first presented itself to be quite bearish, right? My expectation was that it would do a 50-50 whip around and it would come back to the top. And another way you could have seen this is if you had used like a widening, right? And you had seen this as like, oh, it's a widening trend, and there's a 50% line, and that 50% line was the one, like the trajectory, right, that we ended up using. And there was a few different ways to illustrate it. The point is, it ends up landing back on top of that upper trajectory, and it uses this pullback away from a particular midpoint, right, as kind of like a slingshot. So we're driving low X amount, and then we go up X, and then X again. And again, this is something that's not one-off. It's repeated frequently on AMC. So come to this week, right, and Monday and Tuesday happened. And when Monday and Tuesday happened, Booksy was like, you know what? This is like father and mother of all charts had a baby, because the father of all charts had us going down to, and I don't know if people just probably didn't watch that video or something, but a lot of folks are like really confused and concerned because I was saying, look, man, it's possible that you get by the 8th or 9th, it's possible that you're already starting up towards that 15 target. And I mentioned on the stream that by today, yesterday and today, Wednesday and Thursday of this week, if it had not already started up, I was going to be probably rolling stuff, because it would be more likely that the 19th or even later in the month would be when you'd hit your thing. The 19th being a really key date. And then, of course, this upcoming week on Wednesday, you have FOMC. All right. Just to throw that out there, the father of all charts, what it originally looked like was us running up to 15. You can go watch that video, and then possibly diving all the way back down to retest the floor at 6. Now, if you feel like this week has been bad, imagine running all the way up to 15 and then running all the way back down. And part of that idea was that you're kind of running neutral. And here's what I mean by that. If you were to zoom out here a bit, I'm going to adjust the chart just a minute. And let's say you focus on just the downtrend, like the main downtrend. There's a couple ways of illustrating it. This is one of the original ways right here. And you focus just on the downtrend. Well, running up to 15, okay, would be like what we did here, where you would push above and then you would come all the way back below. So the father of all charts is very like bearish short term, because what it would mean is that you would basically be stuck in this lower region for months. And I actually said in the father of all charts model that it may even be like mid next year before you see it really move again, because it would have to come all the way back down. And I said earnings would be a logical place, come all the way back down to $6 to retest. That's always been on the table. And in my mind, whenever you exit a spring level, all right, and I think this is true of all stocks, but AMC is a bit different. You know, we always know it does weird stuff. But whenever you come down and you enter into a spring, okay, and you exit the spring, it's very normal to come back and retest the bottom again and make sure that it's actually on a lot of schematics. It's called the test, right? And so it comes back up and tests it. The thing about AMC that makes it unique is that it's never done a test quite the same way every time. Back in March, if you were paying attention to what happened on this bottom, it actually double dipped. So it had a double spring kind of moment. Very weird, right? So it immediately drove beneath the floor in a bit of a terminal shakeout here, right? And then it came up, it tested it, and then it dove again, and then it came up and basically created an LPS and then left. So a pretty weird way to make a spring. And AMC has done that before, where it'll double dip down into a lower region in order to check liquidity. It's not ideal because from our point of view, we don't know if it's going to succeed or not. So from our point of view, it looks just like a terminal spring, right? And I'm not going to get into too much about a terminal spring, but the truth is if it's a terminal spring, it's probably going to go ridiculous low, ridiculous fast, and then it's going to come back up ridiculous fast. If anything else happens where it drives down and it just kind of sits there, that's not good. If it comes down and it creates a hook and somehow it gets pinned beneath $6, that's not good. Those are things that you do not want to see, on AMC, because AMC historically, when it happens to it, it almost always continues down. All right. Now, all of that being said, what happened on Monday and Tuesday this week is almost identical to what happened back here in March. And you remember that we said we felt that, yes, this is a very similar setup. That's the mother of all charts, that there's a rising accumulation with a falling, shrinking iteration. You get to the bottom, you do your spring, and then you go into another rising accumulation. Even the nature of this looking like a little bit like a head and shoulder here, right? Here and then here gives you the same vibes, right? And then the bottom itself, it has a lot of spring vibes to it. It goes down. The volume, when it drops through, is heavy at first, and then it depletes very quickly. There's light accumulation at the bottom, and then it just leaves on very little effort. All right. And it does confirm on the way out the $6. It does hit it many times, and specifically $5.97. In my mind, that was it. That's the floor. This was the initiation for the operator. This is the spring. Even if you didn't believe that this was the floor right here, right, you would have said that this is the floor, right? And so you would have interpreted it as, well, I actually think 597 is the real floor, or excuse me, 548 is the real floor, and therefore we're going to have to come back down again because this was the initiation, and that was really what bringing the operator into the spring. Fine. You can make those arguments. I would be happy to hear them, right? And I'm not against those arguments per se. My problem is that when you're going back in time, there's really only two spots that you can pick out for the floor. Number one is, where did it consolidate around? And that is our 597. It's the triangulation target. We spent a lot of effort to get to 597 right here. This was a massively, hyper distribution, and it was all designed, all of this was designed right here forward. So this entire year, January of this year forward, was all about 597. We drove the price sideways to accumulate. We drove it back up. We had this hyper distribution, this S curve to drive it lower to tap 597. 597 being the consolidated supply, right, for the stock. And there's something to be said about it because I think a lot of folks right now just don't agree. They don't think that that's the floor. And they're looking at a couple other places, but mainly because of this gap and because of the nature of AMC, people are kind of flipping out about it. In my opinion, these are the only two possibilities. This is it. You've got 597 and you've got whatever this is, I think it's 48. Okay. And you can see the similarities here. If this were to drive the price down, then we came up and drove back down through it again to hit this. Not a lot of people would bat an eye if it hit 548 and immediately turned around. Yeah. However, I think still that a lot of effort has been spent to get to 597, and after that point, immediately after we hit 597, we have a massive rise up. Takes months and months and months. It's a 180% move. We push the top of the creek, then we come down one more time in a really long shrinking iteration of this whole bottom. It's definitely a shrinking iteration of this entire bottom, and this is not the result. This is like the very early stages of the result. And it is not at all finished. And I think a lot of people are already kind of throwing in the towel because we had some red days. I myself am tired, and I feel it. I understand where people are coming from. But there's no doubt in my mind at all that this is the shrinking iteration. It shrinks here, it shrinks again. You can see the little smaller version of it down here. It just happened over and over and over again. It's the same thing that happened from this top down. It happened again here. And there's even more to it than that. And I did it in the other video. The result of something that massive going into this bottom to drive to these two prices, 597 and 547. Both of those prices are significant because of the amount of effort that was taken to get there. And I'm not even talking about the volume analysis we did. We did a lot of volume analysis and OBV analysis. That still stands. Go look at the 4-hour. There's still a massive divergence from January to now, from May to now. There's an accumulation going on during this weakness, right? And it's also pretty apparent that at this point, if you have a similar style breakout from where we are, right? And if all these price targets prove right, if we hit that 1438, you're now above, right? Again, the creek. And this time you're pushing it up, and I believe you're going to hold it. Why is all that really important to understand? When we're talking about this kind of stuff, we're talking about slingshots and all this other jazz. It's important to frame where you are and what could happen next. And going into tomorrow, it's going to feel really scary. At my time, it's 8 o'clock right now. My son isn't feeling well. He's kind of sick. I'm probably going to have him home tomorrow with me. I'm not even sure how focused I'll be on this tomorrow, but I feel it. I feel like we're on the edge, right? And there's even a feeling of, oh, snap, this could just turn into a big S curve and this and that. When I zoom out and I look at the bigger picture, this sell-off, for as bad as it has felt, it's only slightly more volume than what we saw over here. And you can see it. I mean, I don't have to convince you of that. Go look at the daily chart, I guess. I'm just eyeballing it, but I'm telling you, look at it. There was a greater deal more volume in this push up and then a greater deal more volume in this pull down. Is it over? I don't know. I actually found a lot of trend lines that were pointing directly to the 14th, directly into FOMC. But we went down away from that, and we went straight to the bottom early. So we broke down to the bottom super early. All right, I'm coming back around, okay? So remember that what I just said, the nature of, hey, we're breaking out, there's these cat ears, we poked above it, right? And now we retreated back beneath it and then rejected. Well, remember over here I said there's also a horizontal supply level? Where is that over here, Booksy? It doesn't seem to exist. Well, I want you to pay attention and just look at where it is that this rejected on the horizontal. All right. And consider that as an important floor, because it is. Yeah, it is. And typically, if you poke your head above it, the intention is, if you pull away from it, that you're probably going to come back through it. Yeah? And at some point, retest it on the way out, all that stuff. If you poke back down through it, then again, the intention usually is you're going to come back down through it. We poked above it, which tells me, again, that we're on the up and up, and we're pushing highs here. We're pushing back into previous areas that were contested. And this right here, you can look back and here at this range, this is definitely the drop off. I think this was the early test of that supply, early test, sell test. There was very, very low volume here. Yeah. But they knew they found sellers. They pushed it up. They went ahead and distributed and drove the price back down. Okay. Back into this previous area where we also, kind of had a spring action from last time right in this region. So it's already setting up very similar to the way March did. We know the fractals are basically the same. There is no more of a downtrend down here. I mean, you can draw the parallel just like we did back in this region when we broke out from here. There's another parallel, and we broke out here. And maybe we go all the way back down to it, and it's pretty low. If we were to drive back down here, it would be beyond the current bottom, and it would be brutal. It would probably go down to 460 something. And I think somebody said there's a fib down here at like 467, so on and so forth. Okay. But if that happens, then just like what happened over here, you're going to see a greater move to the upside, more likely. Mathematically speaking, if it took off right now, they have, in my opinion, and I can't speak for the operator, but they have enough to get where they need to go. Okay? And I did a calculation based on these particular levels. There's even little ones down here, these little levels, and they're basically little slingshots. Each one of these, if you draw like the 50% up, leads you to the next level up. So they're leaving little breadcrumbs on the way down so they can easily get back up when it's time to pump the stock. At this particular place, right, at 597, okay, to the best of my knowledge, the place where you would rise up to is essentially, and you can see it right here, you know, it's essentially like back to right underneath the initial supply. And this is, again, the high supply for the stock. It's not actually 1950, it's slightly higher, all right? But it's at like 21, okay? And there's a lot of targets that have been found, and this one in particular is one that I think is pretty strong. Okay, there's a lot of them. There's a 1950 one. There's another one that's lower at 1634, another one at 1438. That's the key one, because I think we're going to ultimately probably consolidate around 1438, more than likely. It has the right space for the VRVP, for the gathering of shares. It's a good place for that SOS. I just mentioned it happens to share the same as this angle breakout here. I didn't know about that till today. That was a level that I found from doing the stacking here, you know, and I just talked about this. This is part of how I found it. So for the stacking here, this particular guy was one of the 50% on the iterations. And the next 50% down is right here. And if you pay attention, you can see it. Notice this particular model versus this particular model right here. Okay? A lot of folks, I don't know, man. I know that I do like crazy charts and stuff. I get it. But I think there's something to be said about this observation of things and trying to understand like how a stock is moving, right? And I'm going to do a little bit of a demo thing for you really quick. I'm going to block it out for you so you can see it. I made a weird shape. Yeah. And I want you to notice specifically like how is it traveling, right, around these markers, and like where is it going down, where is it going up? And I should have left this one down, but you get the idea. That was not the best way to do it. Here, I'll do it this way. Booksy, it's taking too long. Sorry, man. I'll do my best. I'm going to make them just big blocky shapes, okay? Because I want you to see what I see, and I think it's difficult for some folks. They don't feel like I'm talking in Spanish or something. Okay? But I want you to be able to see what I see and to really understand it. If you didn't buy into the idea that it was the same, you can definitely see it when you actually draw it out and you look at what happened here. You see that pullback here? It's really minor, but it definitely happened. And it comes back to retest that line before it goes up again. It's right there. There's a little bitty one right there. And then it pushes up again. This is the place where if I were going to say I got really kind of lost, it was right here, because ultimately what happened is they disguised it. It sounds really nefarious, but they kind of disguised the move. And then you can see it dips beneath, it runs above and hooks, runs above and hooks. Because they disguise the move because this hook comes like ridiculous high, right? Like ridiculously high. Okay? So it seems a bit to me like out of whack how high it goes. It's the same, right? And if you didn't believe it before, you definitely can see it now. And I think if you look at the bounce here, right? The bounce here going up and then sliding down, the bounce here going up and sliding down. You can see like this is exactly the moment where, and really it's up here, but this is where you start seeing the repetition. It turns out everything we've experienced since we hit this top has also been a repetition of all this stuff right here. This fractal is repeating everywhere right now. So they're using the same exact model during this pullback, which tells me what? Well, it kind of tells me that we might be right, because if the drawback here ended up in a rising accumulation, and this drawback's doing a rising accumulation that looks just like the bigger guy, it's once again, it's like a rinse repeat. How is the stock being traded? They're just going to keep doing the same things over and over again. Nobody's going to question that. But like, if you observe the stock, you know that's what happens. But what's the end goal there? Well, if you're driving the price down, doing this particular motion, then the end goal, and you're shrinking, the end goal would be reversal. And I know that's a lot to kind of a lot to take in, and perhaps you don't really care about that. I get it. I do. But you should care about the fact that when this guy pulled back, and this is kind of coming full circle here. I said I didn't have time to go through into all of this, and I went into all of it. When this guy pulled back, it does something very specific, which is the direction, the amount it pulled back ends up being a super important number. You can see that from this point where it fell down, right? From this supply point where, again, it's really the last time it hit the resistance here, the price resistance. It pulls back away from it enough so that when it launches 50-50, it gets you right to the top. And then beyond that, remember what I said about the 50-50? Same thing applies to this top. Notice that it pulls back from the bigger top, right? Also pulls back from the bigger top 50%. And when you go to this 50-50, you actually find that it's almost exactly where we landed on the top here. There's a couple interesting things that I don't really want to get into, but basically there's a pullback here and there's another overextension here, and if you add them up, it gives you the total amount. That's difference. The point is like, you're pulling away from this particular marker, you're going back up the same amount, and then you're doubling it. Does that make sense? You're pulling away from this particular marker, right? You're going up, and then you're doubling it. So the thought occurred to me that maybe that's just as simple as like fib extensions or blah, 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 blah. But there is another thing going on here, which is a rising beak. That beak happens to have the layup effect. So it takes the measurement of the width of the beak here, and it places it from here down, and it creates your SOS like perfectly. It's pretty wild, right? Well, we have the same thing right here potentially. Like, this should be a gigantic beak forming. It's very difficult right now to see it. It's difficult to judge it. All right, it's very difficult because it's not going to be regular, right? Unless you can have a really clean way of drawing it. And you can see down here, it doesn't really, if you were to copy and paste this and drag it over here, it doesn't really work, just as a copy paste. You have to already sort of know where your bottom is and then know where each of those touch points are going to be. But you can see it. It creates the curvature and it runs itself up. Okay? All right. I needed to talk about all of that stuff because I don't have all the answers to everybody's questions about when things will happen. I know December 18th is important. I know that December 19th and 20th is important. I know that December 14th is FOMC. I know that the bull market is on the brink of happening. If SPY runs to 430, we're probably in a bull market, right? And that's possible. The setup that it has is a massive, massive double bottom / diamond bottom. Price targets for that, early price targets for that are like 450. And even if you looked at the lower end price targets of 415, it still lays you up above the downtrend, the widening downtrend. With the Fed possibly coming with a 0.5 in interest rate hikes next week, it would signal, I think, to a lot of folks that it's a bull market. And I believe that the meeting in November hinted to people that that might happen. I believe, as a result, what's most likely going on it's just my thought, is that they found out, okay, yes, there is going to probably be this bull market. More than likely, folks already kind of knew. They're riding on the wall. They drive the price up. Operators drive the price up. Short operators would want to get out of the stock, or get the price down as low as possible to start a big sell-off. Get the price down as low as possible so they can cover low. Long operators wouldn't mind going down and accumulating lower, if that's something that they can do. And ultimately, they don't really care if they're going to go down and retest the floor or they're going to go down and create a spring. Now is the time to do it, because if you're going to enter a bull market, you don't want to do it like the father of all charts had us doing it way later into next year. That would be like a situation where we're basically just going sideways for 6 months, And if we're ready to go now and go ahead and do this move, it's going to be big, and it's going to be big. It's going to be bigger than SPY's move. AMC has consistently run 12 to 16 times the amount that SPY has on some of these runs. So it's not out of the question that would happen. We are currently set up proportionally the same way SPY is. It doesn't feel like it, but we are. And if we run the same proportional distance, we're going to have a bigger move on the whole, because we're going to come up to here. And SPY doesn't have to move as far, okay? I'm using SPY as the market standard example, okay? No other reason, all right? I believe what happened here is that there was a likelihood of a pullback always. Whether that pullback results in a full double touch or just a LPS or whatever ends up happening here, or another terminal spring, I don't think it matters that much. I think what's most important is what happens after, and that is that if you come up and you regain this level right here, 853, that's the most important thing that can happen, because when AMC had that pullback in March, it did so, and it came back up and it reclaimed that place that it broke down. And ultimately what that does is it slingshots you up, right? And this is what we were talking about before, is like, if you look at those levels as best you can, and I was saying, like, I feel like we had enough, you can go to here, 1034, you can go to 1081. All of those gets you up above the downtrend at this point, right? The arc is pulling away from us, and it's farther away than it's been, and the local arc here is super steep. And everything about that, to me, is like really bullish, okay? Because the setup here, I know it feels like, someone said to me, it feels like a bear flag. But a bear flag doesn't break out of its downtrend. And this broke out of its downtrend, y'all. So whether or not this comes all the way back down to retest this trend, which it could, or if the creek is enough, right? And at this point, I would personally say I think it kind of dipped beneath the creek, right? Just a bit. If that's enough, then let's get out of here and go. Like, it's got the distance away from these center marks to get to the initial price targets that we found, and that would be substantial. It doesn't need to go lower. And I know what people are going to say. Yes, it does, this or that. I don't care. I don't care. I'm telling you, from a mathematical standpoint, it could happen. If it happens, great. I was wrong. I'll admit it, but it doesn't need to mathematically. Like, it already pulled away enough here. I measured this diagram before it even got down to 597, and now it's down here. It tapped it today, and it's looking like it wants to kind of possibly make a bottom, or either do that or S-curve through it and nosedive. So I'm looking at that, and I'm thinking, man, that looks really good. I'm not going to talk about this being an M with a big M with another M on the other side. Hopefully you guys at this point are aware of what a accumulation looks like, a master accumulation looks like on this stock. This is the end of the master accumulation. No matter what happens, you can't read it another way because of the size of this thing, the inverted head and shoulders, everything. All right. Back to this fractal shrinking. So I'm kind of going in reverse here to get back to the smaller picture. I know, you're like, it's 40 minutes in, just tell me what to expect tomorrow. Look, I don't know. If it's the floor, they'll hold it, period. Buyers will buy it up. They will not allow it to drop beneath the floor. If it's not the floor, or if there needs to be a terminal spring, buyers will let it go. Period. I mean, there's nothing else to it. It's not about what I want to have happen. If it's not what it needs to be, then it's gonna fix itself. I believe this is basically what we're experiencing right now. I know it looks like a hot mess, okay? But this is the iteration that I grabbed, and I think it's doing the same thing on the way down here. And I'm fairly confident of that because when you look at this particular guy, yes, I know the fractals look different. Maybe this drives its price back up, Booksy, and it goes high and everybody gets excited and it goes to $7 and then it comes back down, Booksy. Oh no. Well, if it does that, then that's still a good sign because it could mean that it's the bottom still because this did never come back lower if that's the case. Okay. I don't think it matters too much. If it runs up to $7 and it consolidates here, and then next week, we start cascading down again to 6 area, fine, it's okay. The point is not like to be perfect about everything. It's just to have the general idea of what to expect. Okay, the general idea of what to expect. And I do think that it's a shrinking iteration to some degree. And when I went to investigate it today, it was really obvious to me anyways, looking at this bottom, that you're experiencing like a copy paste of the master fractal. I don't know why I deleted that. Sorry about that. You're experiencing like a copy paste of like the master fractal here, the big fractal, I'm sorry, not master. There you go. I mean, it's pretty undeniable in my opinion. My opinion may not matter to some people, but this is what I think. Okay, I think that's what we experienced. You can see it fairly verbatim, and I know that this often sells off in very much the same way every time, but I really do think this is it, and it's sliding down, right? So here's the double top, and it slides down, and then there's another bottoming that occurs, and I think it does it all over again. I really do. I think it's just kind of a rinse repeat, because remember the double top is like contained. It's the same as this guy. So I think it just does it again on rinse repeat right here. You can see it, and then it eventually turns around and goes the other way. And really, it does it again. If it wasn't frustrating enough, we're experiencing like a copy paste, like all throughout here. I know a lot of this stuff looks like it's all the same anyways. Today, to me, looked a lot like what happened yesterday and today. And again, like if the iterations are completing and doing their thing, and they keep doing the same thing over and over again, then maybe that's what we're going to see. Maybe we're going to start seeing an expansion model of these. To me, that looks pretty dang the same, like almost identical. I'm not sure how you could look at that and say that that's not basically the same. So I'm seeing like an expansion that might be occurring at this point, which is good, potentially, because this set up higher. And it also crossed this little creek, and it broke the trend that was being established right here from this point to this point. It's wrapping around it right now, but it did break the trend. And that's a change of character. So if this is an expansion right here of what happened in this region, that's a good thing, because that expansion, whether or not it continues like exactly the same every time or not, it doesn't really make any difference, because it's set up higher this time, and it would then continue upward and start breaking out and doing different levels. So again, I have this going like up and up and up, but if it comes up to here on 7 and then it comes back down again, I'm not going to be overly concerned. The last thing I want to bring up today is March. And so March is I've already talked about March a lot, and March is one of that I'm using as kind of a model, because I think it has everything that we need right now. Even though at different times maybe it's not always been the best thing to look at, I believe that this is a really strong comparison. And I think that what I saw today didn't hinder like my thoughts about that. Notice that the sell-off that begins here kind of becomes like the highest point like right here. I mean, there is a deeper sell-off that occurs, but then there's a secondary sell-off that occurs that's got greater volume on this little double bottom region. And I think that that's kind of what we experienced today. And it looks very similar until what? Until you get to this part, right? Where it doesn't look quite as similar. It just kind of keeps going down. It doesn't turn up and run, right? But I want you to just kind of see it so that you can observe it yourself. I'm showing you like different things that are all relating to the same area here. All right, but take a look at this. Take a look at the way this drops down, the cat ears, the sliding down into a basin. Okay, there's a gap to the upside, a drive down that doesn't come as low as the previous ones. This one actually double bottoms, which is kind of interesting. These guys come lower. And then it drives the price up, and then you get this pullback, right? And ours just kind of kept going like all day. In theory, I counted it out. If you count out the number of days from here forward, from where we are, this is December 14th. This would happen on FOMC. I would love to see an ascending accumulation. I also know a lot of people are going to look at this, and the first thing they're going to say to me is, Booksy, it doesn't look the same. There's not the same kind of strength here maybe that we had here. And I would say, yeah, it does look different. And there is the possibility, right, that this is just a double flush. I don't like having to be bearish, but you have to recognize that, look, if A to B here, and this is kind of where I'm finding a little bit of rest. If this is the same as the whole region here, right, and that was a shrinking iteration, yeah, and we also know that this is a copy of that as well, then you can tell that no matter what, it's flattened out a bit, okay? It did not continue down in the same trajectory. Clearly, this is an important level. I think we actually wicked down to 597 on the mark today. Clearly, this is an important level. But that being said, if the goal has been to get us down here, and we spent all this time getting us down here, and they really want to drive it low, and you see it in the tea leaves, and you want to see that terminal spring, this is probably where it's going to happen. And it doesn't feel good, but this is probably where it would happen. I mean, if it finds itself bouncing here and goes up high tomorrow, I'm not sure we're going to see it until maybe, if at all, until like next week, obviously, because that'd be Friday, but until maybe the day of FOMC or something. But to me, like, this is it. And I really think that if they're going to drive the price down and try to get it below and get it down to 547 again, that this is the time to do it. So tomorrow could be a bloodbath at first that ends in like kind of this triumphant move, or it could just sort of meander its way back up and start moving back to the upside. And I don't really have a lot of other expectations outside of that. I believe 597 is the floor. I believe if it's going down for a double dip, it's probably going to double dip to the same place it dipped the first time here. It makes sense from a fractal standpoint. It makes sense to some degree from a fractal standpoint, I should say. It makes sense from a head and shoulder standpoint, and to some degree because you're coming back, right, to the place that you started, right, with this guy. I think all that stuff is possible and likely. When you one more thing really quick, there's so much we could talk about. If you take a trend and you draw a parallel from here and you drag it all the way down, this actually points to, I didn't do it right. Hang on, I must have hit the wrong thing. I'm gonna mess my chart up for just a minute. I think I hit the wrong one. Yeah, it is a parallel trend. So if you want something to look at and you're feeling like, I don't really have enough here, I don't like the fractal things, I just need a line, you draw your horizontals, 597, draw the 548 or whatever it is, 546, draw this particular trend right here. Okay. And I think this is enough. I think this is enough. This was the one that was really like eye-opening to me because it points to December 13th. So seeing it drive up here and then come back down would make a lot of sense to me. So I know I have it going like straight up, but realistically, this could potentially not move until the 14th or 15th or whatever. But you see what I'm saying? If it can use this time to cross these little creeks that it's created on the way down, then I could see it kind of chopping here and settling. And if it makes you feel better, that's this is kind of what happened before right here, where it pushed up away and it came back through it, dipped down. And if it did it tomorrow, then it would only dip down to like 592, and that would be weird. But I think it's the level. I feel like it's probably this level, 590. Anyways, I'm not against it dropping beneath 597. It just needs to return very quickly. And I'm not even against it dropping all the way down to 547. It just needs to return very quickly. And I'm not even going to mention this thing right here, which everybody knows about. I think in the worst case scenario, it passes through it, it goes down to that 4 something, and that's your terminal spring. Okay? If it's a shakeout they want, it's a shakeout they'll get. I will do a recap tomorrow and talk about what we saw. I'm trying to do this video. I know it's long. If you stuck it out, great. I'm doing this video to help summarize everything so that tomorrow's video can be really short. So thanks for watching. I know there's more to it than that. I could have went into a bunch of other stuff, believe me. But that's the summary of all the stuff we've been working on this week. And I'll do a recap of the Friday price action tomorrow. Thanks, y'all.